right, we're live.
Welcome to the third session of this year's Ask an Expert Firewise virtual workshop series, Understanding Insurance in the Wildland Urban Interface. This is the third year for the series, with 2 more sessions scheduled for October and November, and we hope you'll join us for those. Registration for the October session will open this afternoon. I'm Kathy Prudhomme, the Firewise Program Manager with the National Fire Protection Association's Wildland Fire Division, located in our Denver field office, and the host for today's 1-hour workshop. Joining me today is Aaron Anderson, our tech expert, who's keeping us live and connected. Our thanks to him. This session received more than 350 registrations, the most of any of our previous sessions since we've been hosting the workshops, and those came from 38 states and 5 countries. So welcome and thanks to each of you for joining us today. This workshop is being recorded and will be available in our archive. Please share the information you learned today with your stakeholders, colleagues, and neighbors. The workshop in its entirety can be found at firewise.org under the Online Courses and Education tab. If you're not familiar with the Firewise Communities USA program, I encourage you to visit firewise.org after the workshop to learn more about how you can get involved where you live and begin the process to become a recognized site. There's currently more than 1,300 active Firewise communities in 40 states. Each has completed a rigorous set of criteria to become a participant in the national program, where residents in wildfire-prone areas work with neighbors to reduce their risk annually and to increase their home's potential for survivability at both that individual parcel level and also throughout the larger neighborhood and community. In today's workshop, we're focusing on homeowners insurance for residential properties located in wildfire-prone areas. Before we get started, a quick overview of the format and an introduction of our guest, Ask an Expert presenter, Carol Walker. Over the next 40 minutes, I'm going to talk with Carol and ask the questions we most frequently hear around insurance for homes in the Wildland Urban Interface. Then we'll take the balance of the hour as an opportunity for you to ask your questions. So at any time from now until we get to the interactive component, if you have a question, use the question mark icon in the upper right-hand corner of your screen to submit it. And we'll get Carol to respond to as many of those as time permits. Now, without further delay, it's my privilege to introduce you to Carol Walker. We first met many years ago, probably about 15 years now. Can you believe it's been that long, Carol?
And I can't.
I know, huh? And she's always been such an invaluable resource on the topic. So let me give you a little background on Carol. Since 1998, she served as the executive director of the Rocky Mountain Insurance Information Association, a nonprofit trade organization that represents auto, home, and business insurance companies in the Rocky Mountain region. So the RMIA, or RMIIA as they're referred to, is headquartered in Denver and is an insurance industry resource for consumer, statistical, and background information on insurance, loss prevention, and safety issues. She's an industry spokesperson and advocate in Colorado, New Mexico, Utah, and Wyoming. They also lead an extensive grassroots legislative network and spearhead key industry education initiatives. Prior to her insurance life, she worked for 11 years as a television news reporter and anchor for ABC, NBC, and CNN affiliates in Washington, Montana, and Wisconsin. So welcome, Carol, and thanks for being our Ask an Expert presenter today.
Thank you, Kathy. And I think the number of registrants really reflects what you and I know in working these issues for almost 2 decades is there's a tremendous need out there and appetite for insurance information, especially for those folks that are living with wildfire risk. So we really feel our full-time job is to help consumers, our community partners, and everyone understand how insurance works and be sharing as much information in advance of these disasters as we possibly can.
Well, it's definitely one of those topics that we hear time and time again. So thank you for taking the opportunity to spend this hour with us and answer some of those. So let's start off with an overview of the Rocky Mountain Insurance Information Association and tell us who you are, what they do, and share what your role is within the association.
Well, as I said, our main job is really to educate the public, and we do that through talking to the news media, outreach to consumers, working with the agency force and the companies, really to get as much information in folks' hands as possible so that they're financially prepared. Nobody wants to think about insurance until they need it the most. That's the wrong time to be thinking about insurance. We really want folks to be financially prepared for when they have that bad day, whether that's an auto crash or a disaster or a wildfire that devastates their community. So our role during a disaster like a major wildfire, and I've been around a lot of them, from Los Alamos in New Mexico to the Waldo Canyon fire to the Black Forest fire here in Colorado. And we really want to, before that wildfire, be talking to people about how to protect their property, how to be financially prepared. Then when that wildfire happens, when they're on an evacuation and they're going back in, helping them understand the claims process. And then after the fire, working with our government and community partners, I'm on the state recovery task force here in Colorado, is how do I work through that claim process, rebuild my home, and how do we rebuild that community? So really we see our role before, during, and after in helping residents as much as possible understand their homeowners, renters, and business insurance. And then I know as people walk away today, they're going to have a lot of questions still. This is a complex topic of insurance. We have a lot of resources. All of our guides, wildfire and insurance. We have walking through the fire step by step and claims recovery. We have a guide on that, all available on our website, Kathy.
Well, let's start off with one of the most frequent comments we hear from residents living in an area with a wildfire risk. And that question comes up time and time again. I don't want my insurance company to know that I live in a wildfire prone area. So share with us what insurance companies already know about a property and where that information comes from.
The reality is the insurance company knows where you live. They have specific information on that neighborhood and that region. And if you live in the wildland urban interface, they're aware of the risk associated with that, along with the individual risk to your property, what the slope is, the construction of your home. These are all things that they're considering when they're insuring your home and determining your rate for that property. Also, technology's become more sophisticated. So they're going to have access to information about what your wildfire risk is, and even what mitigation needs to be done on that property. So the bottom line is they have this information. It's not something you want to hide from them. You want good communication with your insurance company, because the bottom line is you want your insurance company to understand the risk of your property so your home is properly insured. You want to give them the fullest picture you can of what your risk is, what your property looks like, if you've made any changes or additions to that property, because you want to make sure you have adequate insurance in place when you do have a wildfire and you face that situation.
Well, that's the perfect segue into this next question, which is another one of those commonly asked by WUI residents. What does the insurance industry take into consideration when making their underwriting decisions? And so we're clear on terminology. Describe what underwriting means before you get into the details on this one.
Yeah, unfortunately, insurance is a world of acronyms and legalese and lingo, and I know it can be really confusing for homeowners especially. Underwriting really is, they're underwriting your property. They're looking at that property and weighing all the risks and determining whether they can insure you and then what that insurance risk will be. And then that's going to be how they determine your rate. There are a variety of individual and property risk factors that go into that underwriting decision. They're looking at everything from the location, and not just the location being a wildfire risk area. They're also looking at, what is the crime in that area? How much hail do you have? Is it a hurricane-prone area? What kind of natural disaster risk do you have? And then construction of your home. What is your home constructed of? How big is your home? What's the square footage? When it comes to wildfire, they absolutely are looking at mitigation. What kind of mitigation can be done to reduce that risk? But then they're also looking at beyond mitigation, what's the slope of that property? What are the access roads? Could an emergency vehicle get down to your home on that road and turn around? And then they've always looked at proximity to quality fire protection. How far are you away from that fire hydrant? How far are you away from that fire department? What kind of fire department is that? How many engines do they have? How many ladders do they have? And they have accurate information. It used to be back in the day that you would just say, yeah, I live 5 miles from the fire station. Now they have accurate information that no, in fact, you live 7 or 12 miles. That's going to go into that underwriting decision as well. And then they're not just considering WUI risk. This is something that we talk about all the time. I know when you're living in wildfire, that's the main risk you're thinking of, but they're also looking at other factors and looking at whether you're an insurable risk for that company that they can take on. Here in Hale Alley in Colorado, hail's a big factor. In other places, it may be earthquake risk, it may be hurricane risk, it may be tornado risk.
Well, tell me this, Carol. Do all insurance companies use the same guidelines to make their underwriting decisions?
Insurers do have their own proprietary underwriting and rating guidelines. In fact, they can't even share those. Those are proprietary and something that there's even antitrust laws that surround those. So they do consider common risk factors that we've discussed. But actually, this is good for consumers. Oftentimes we hear when it comes to wildfire, oh, I wish they all had the same underwriting. I wish they were all considering the same thing when it comes to risk for my property. But these competitive differences are good for consumers. It really is with wildfire a risk that insurers can still insure. Unlike hurricane, where in states like Florida, it's become a situation where can the private market stay in? When they look at wildfire, different from earthquake and hurricane, where yes, you can retrofit, yes, there are many things you can do to protect your property. Wildfire is one of those risks where working with the Insurance Institute for Business and Home Safety and doing the research, and we know that there's a lot that homeowners can do to reduce that risk. So insurance companies really are looking at mitigation as a key factor. So while those folks that are very high risk, they're a long ways from the fire department in no man's land, they're on a slope, they may need to look at a higher risk policy. That is just the reality of the situation. They may no longer be able to be insured with a preferred risk carrier, but that mitigation piece is going to be key to remaining insurable.
Well, we've both heard this more times than we can count from we residents. And this is what they say. I don't need to do as much mitigation as I could be doing because I have insurance that will cover my losses. Now, besides the fact that comments like that have so many other issues related to that mindset, will a lack of mitigation impact premiums and or levels of coverage?
Yeah, and I think that anybody who's ever experienced a wildfire loss would never say that. It is heartbreaking. We understand that when they've been evacuated from their home on a 911 call, they come back and there's nothing left. There's a burned out foundation. No one wants to just say, hey, I have insurance, so I'm not going to take any of those steps to reduce my risk. But from a financial perspective, insurers are getting stricter about all property risks. We now live in this age of mega catastrophes where we have devastating hurricanes, Superstorm Sandy, devastating tornadoes hitting the Midwest. Here in Colorado, we've lost hundreds of homes over the last few years, as they have in California, Washington, Oregon. So insurance companies are really looking at wildfire as a shared risk. If you're willing to take scientifically proven steps to protect your property and to put the odds in your favor of saving that home, that is going to be how you get and keep affordable insurance. Folks unwilling to do that and share that risk, that's going to put them in a bind. They're going to have to really look at what their responsibilities are. And first and foremost, Kathy, you want to make your family safe. You want your home to be safe. So that's really what the bottom line is. But there is this pocketbook financial incentive with insurance is most insurers have mitigation requirements in place, programs in place to get and keep and renew insurance. They're going to ask you to do certain things. Many folks on this call may have gotten notices from their insurance company on their renewal saying, hey, need you to move the fields away from the house, need you to thin those trees. Not cut down all the trees, but thin those trees. So insurance companies are getting very specific in what they require, and most do. So that attitude isn't going to get you very far. I'm just saying, I have insurance. I don't need to take any of these steps.
Well, tell us what's covered when a wildfire damages or destroys a property, since there's so many different things that could be impacted. And is the structure and the land looked at as one and the same, or are they totally different?
And taking just a step back, because when we're having a wildfire, I get questions sometimes, do I need separate fire insurance? I think because homeowners insurance is such a broad, comprehensive coverage, covers the roof over your head, the kitchen sink, if your pets bite someone, to really be understanding what it does and does not cover. A standard homeowners insurance policy covers damage from most natural perils: fire, windstorm, hail, water damage, excluding flooding. The water damage is more when your washing machine hose breaks and it's a sudden water loss from an appliance or something like that. Then it covers explosions, riots, theft, the cost of living elsewhere when that structure is being repaired or rebuilt. It even covers a certain amount of liability. So it is a comprehensive coverage, but understanding it is key, especially for these WUI residents. You're really insuring two separate things when you're insuring your home: your structure and your contents, but that coverage works together. And you're not insuring the property, you're insuring the land. I know for people who especially live in the more mountainous communities that all of the trees, and that's part of the value of their land, but what your homeowner's insurance cares about and what you're insuring is that structure and those personal belongings. You should also be talking about, and we'll go into more detail, what would be my debris removal coverage? Is there a certain amount for landscaping if I were to have a fire? And then building code upgrades. That's definitely something that you can buy some extra coverage for and that you should be thinking about.
Well, are there differences in what's covered if the policy is for a homeowner versus a renter? And for example, what if a fire destroys an apartment building?
Right. So just to go into a little more detail on what your homeowner's insurance covers, and then we'll go into what renter's insurance covers. When you're insuring your home, you're insuring it for the total amount it would cost to repair and rebuild your home if it were destroyed in today's dollars. That's not the market value, not what you can sell it for, but what your insurance company cares about is the cost to rebuild it in today's dollars, because that's what they will be looking at and their financial obligation really is. So that's a critical piece. Extended replacement cost or replacement costs, that's also something you should be thinking about talking to your insurance company about, that extra coverage. What that's going to do is give you really an inflation guard. It covers usually about 20% over the limit on your policy, because understand your policy has limits and that's what you're insured for. This gives you an extra about 20% for if building costs go up, if you have a catastrophic wildfire that destroys a neighborhood and there's price surge. What that is opposite of the actual cash value policy. That's going to be what we call an ACV policy. That covers the cost to replace your home minus depreciation costs. So always, if you could afford it, be thinking about replacement cost coverage, and make sure you're advising your insurance and increase your limits of your policy, especially if you've made any improvements or additions to your house. Oftentimes, this can lead to somebody being underinsured if they haven't shared that information with their insurance company, and it's increased the cost to rebuild their home by thousands of dollars. So, and this more goes to your question about renter's insurance too, Kathy, is you're also insuring your home's contents. So beyond the structure, a standard homeowner's insurance policy will cover generally about 50 to 70% for contents of what the structure is insured for. So that's a pretty general amount when you think about that. So if you have a $100,000 home, you'd have $50 to $70,000 for replacement of all of your stuff. Again, talk to your insurance company about replacement versus actual cash value coverage for your contents, and then understand that that might not be enough for all your stuff. And then within that contents coverage, there's limits for things like jewelry, other items. So those are the things you're going to want to what we call schedule. And I don't want to use too much insurance lingo. This is really just extra insurance and endorsement that you would buy for big ticket items. If you have an art collection, the jewelry again, any antiques, because Uncle Joe's clock, he may have said that it was worth $30,000, but it could be worth $10 on Craigslist. So those are things you're going to want to get separate appraisals for, and then schedule those with your insurance company and buy that extra insurance. And then one question I know that we were talking about is when we have WUI properties, a lot of times there's other structures on the properties. If they're attached structures, those are generally covered on your homeowner's insurance policy. But of course, you want to make sure you're talking to your insurance company, they understand that those are separate structures because it'll add to your limits. Any unattached structures, though, those are going to need something that is generally called other structures protection. And then just getting to your question about renter's insurance is the main difference, and this is such a vulnerable group to us when we have a wildfire, is many renters just don't buy insurance. They're living in an apartment, they don't think about it, or they put it last on their list of something that they want to make that investment for. For about the cost of a pizza, you can make sure that all your personal belongings are insured. It also gives you liability and additional living expenses coverage because the landlord insures the structure, but you need separate renter's insurance to cover all of your contents. If you don't have that in place, you will have to pay out of pocket for all of your stuff, and that is a heartbreaking situation. Also, the additional living expenses, which I think you have more questions about, we can go into more detail, that's also included in a renter's insurance policy. So it really is good coverage and one you really can't go without.
Well, I loved the cost of a pizza analogy. It's, or probably 2 Starbucks.
And if you combine it with your auto policy, it really pays for itself because you can get a multi-lines discount. So make sure that you're renting a home or you're living in an apartment, you're talking to them about renter's insurance.
Great information. So being ready year-round for a wildfire is obviously really important. Tell us from an insurance perspective what we can do long before there's an emergency notification to evacuate that'll help if a claim needs to be filed after the fire.
Absolutely. Along with your evacuation plan, be thinking about what kind of financial documentation that you need to have. Create a home inventory. I won't be able to say this enough today, of your personal belongings ahead of time. And there's so many resources out there, Kathy, individual insurance companies have apps now, technology to help you do this. The industry actually has, and the website's down there, knowyourstuff.org through the Insurance Information Institute. You can download this to your personal PC. They also have apps that you can get through the app stores. This will walk you through room by room to help you document your stuff and prompt you to. Then if you take photographs and videos, which are critical, you could add those to that inventory, and then it'll prompt you to write down serial number, make some models of things, purchase prices. Bottom line is the more documentation you have is the better. But if you have anything, even if you're on a pre-evacuation notice, not when you're on a mandatory, get out of the house, is take photographs, take videos. This is going to take a lot of the heartaches and headaches out of that claims process if you do go to file a claim.
Great advice. So kind of on that same theme of evacuation, during a mandatory evacuation, will my homeowner's policy pick up the tab for me to skip the stay at the shelter or visit to my sister-in-law's basement and let me go straight to, let's say, a Marriott until I can return home?
And some companies may have different lingo. It's generally called additional living expenses. But when you are on a mandatory evacuation by a civil authority, not on a voluntary evacuation, but for that mandatory evacuation, you have what's generally considered prohibited use coverage. So when you're on that mandatory evacuation, it covers extra out-of-pocket costs for living elsewhere during that evacuation time. There's usually a time limit on it. So when you are evacuated, get in touch with your insurance company or agent immediately. Find out what your coverage is and how much you have, and then any time frames that are attached to that. That's critical. And during these evacuations, insurance companies have 24/7 800 numbers. You can get in touch with your agents. They're also usually on scene. They're right there at the shelter, so make sure you're talking to them. Additional living expenses also come into play as where when damage makes a home uninhabitable. You go back to the home, you're going to have to rebuild, you need to live somewhere else. they will cover a like, kind, and quality, those extra expenses above and beyond for you having to live out of your home. Again, check with your insurance company to know what that coverage is, and do it now, not when you're on that mandatory evacuation notice.
Well, describe what that typical claim process looks like after a wildfire. And on average, how long does it take to get paid for your loss or damages to your home?
It's important to understand that your insurance policy is a legal contract. It's a two-party contract, though. So you have certain rights within it, and so does your insurance company. And also know that your insurance company is one of the most regulated industries out there. And they are going to want to settle that claim as quickly as possible. They don't want to rush you, and there is a process around it. I tell anyone, especially when you've lost your home and your neighbors have lost your home, and there's hundreds of homes that are lost in one community, that can be a process. We hope that's not overwhelming, but the communication with your insurance company is critical. An adjuster will come out. You've hopefully already talked to them even before when you were evacuated. They're going to inspect that damage and then offer you a settlement. Understand within that limits of the policy, we used to have something called guaranteed replacement policies back in the day. Really, those don't exist very much anymore. They really are going to have certain limits attached to them. Hopefully you've purchased replacement cost coverage. It's going to help you rebuild if those costs are higher, which they generally are, and they're going to offer you a settlement. They're going to work with you on a scope of work. This is going to take a while. You're going to hire that reputable contractor and working with your insurance, making sure you're working with someone reputable, and develop a plan to reconstruct your home. Then you also will be doing an inventory. Hopefully you've done it in advance. You can just hand it right over to them. But really creating a personal inventory after the fact can be difficult. Your insurance company will work with you on that, but it pays to work through that inventory process to make sure you're getting your full replacement coverage. And then understand that you'll still be responsible for your mortgage. This comes as a surprise to some folks, but the mortgage lenders are part of this process. They require being named on a homeowner's insurance policy, and they're party to any payments related to that structure and the rebuilding of that structure. So what we see many times is the lenders putting that money in an escrow account and then paying for repairs as the work is completed. That's important too, to make sure that there's not contractor fraud and that those payments are being paid out as the work is being done.
Well, are the claims paid all at one time, or are there incremental payments for the loss?
I think understanding how the claim settlement process and payments work helps take some of the anxiety out of the process, because I think what we have a lot of people is panicking. People are telling them, wait, don't sign anything. But really, if you're offered an on-the-spot settlement, especially for limits of your policy, you can't accept it right away. They're going to be working with you to rebuild the like, kind, and quality home, and you can reopen that claim. So just because you've said, okay, I'm accepting this claim, you generally have up to a year to reopen that claim and file for additional amount. Again, your lender may hold that money in escrow, but you'll be working toward rebuilding that house. That first check you get is often an advance against the total that settlement amount, not the final payment. And then you're going to receive separate checks from your insurer for each category of damage. For example, a separate check for additional living expenses occurred while you're living away from the home. Also, all of your personal contents. Is it something that has to do with the rebuilding of the structure? That would be separate as well. So there are a number of different payments that have different timings attached to them. Just important for you to be communicating with your insurance company. That'll take a lot of your anxiety out of that process.
Well, what's the best way to ensure a policy provides enough coverage, and how often should somebody review their policy?
This is so important. We talk so much through Firewise about making sure that you're protecting your property, doing those mitigation steps. We want that to be a parallel track with you being financially prepared for that wildfire. Do an annual insurance policy checkup to keep up with those local building costs. Again, what you're wanting to be is insured in today's dollars for the cost to repair and rebuild, and then be adjusting coverage to include any home remodeling and additions. Some people say, well, I might not want my insurance company to know about that because my rates will go up. You want to make sure you're adequately insured. For just a few bucks more, you're going to be looking at that replacement cost, having the adequate insurance in place. And again, what you purchase for insurance isn't just a guaranteed amount. you need to keep up with it at least on an annual basis, or if you've made changes to your property. And then review those auto limits and the coverage as well. Make sure that you're talking to them about comprehensive coverage that will replace your vehicle in a fire. And then ask about coverage for building code upgrades. That's something that will change from the time you've built your home to the time you have to rebuild your home, and there is additional coverage for that. And then there's usually a set amount for debris removal and a set amount for landscaping. That's not all the trees again on those property, which it's not going to replace all of those, but you have a certain set amount for landscaping. And then know what is and isn't covered. Flooding is specifically excluded under all homeowners and renters insurance policy. Consider separate coverage for that. And then that home inventory, I said I was going to repeat this again and again, my mantra, just because I've worked with so many residents where that's their second heartbreak. Sometimes they say it's worse than the fire is when they're having to go back and backtrack and create that home inventory from scratch. And then when you do that home inventory, that's going to make you assess whether you need extra coverage for those more expensive items.
We hear that all the time too, as if the fire wasn't a kick in the knees to begin with, but to create everything that we ever had. You hear all the stories about, I had to make a list of all my antique Christmas ornaments, and all of my husband collects first edition books, and all of those things that reliving what used to be in your house and now having to put it on a list is, for some people, they tell us that they can't even go there right away, that it's too fresh, it hurts too bad to go back and go through mentally what you had in every room. So doing it up front saves you so much pain and agony.
Right. And also different states have different laws in place. In Colorado, for example, your insurance company is required to give you offer you a certain amount up front, but then you can go back and do the inventory. So know what your state laws require. Also, there may be different time frames available to you based on your state law where you can choose additional coverage. So for example, in some states, they will offer you up to purchase 2 years of additional living expenses, which you live in a high-risk wildfire area, is something you may want to consider. Some companies offer that anyway, but that in some states that is something where you can purchase extra coverage for.
Well, we've covered that category. Now, go with me. I worked for the office of a fire marshal for many years, so this one always is on the forefront of my mind. When it's time to repair or rebuild after the fire, explain how current building codes come into play for a home that was built long before a current code was adopted, and are those taken into consideration when a claim gets paid?
This has become a significant issue, especially when we have a major catastrophic event like a wildfire or a tornado, because those building codes change all the time. They change from your municipality, they change from your county, they may be building code upgrades for electrical, they may be requiring safety things, which we think are very, very positive, like they would require a fire and hail resistant roof. But then we're also seeing building codes just that apply to be more environmentally friendly. In the 4 Mile Canyon fire in Boulder, there were a lot of green building codes in place that required most of carbon footprint rebuilding. So what we in the insurance industry, here's lingo again, call law and ordinance coverage, that's additional coverage for building code upgrades. Some policies may just automatically include a certain percentage, some may require additional coverage. Do check with your insurance professional to find out what they offer. Very generally, about 10% of your policy limits would be with your what we call L&O coverage, building code upgrade coverage. Different state laws can also require certain coverages, so just make sure you know what your rights are and then also what coverage is available to under your policy.
This information is so good, especially about building codes, because, the average homeowner has no idea how often building codes change and what building codes were in effect when they built their home. So I think that information and just putting that on their radar is so helpful.
Well, and what can lead, Kathy, to people feeling like they're underinsured, or things like not having enough coverage to rebuild under the new building code, or having done additions and repairs to their home that aren't now considered in that policy limit, or not keeping up on a regular basis with your limits. So these are all things that are going to help you rebuild that home that you have in the same type of home that you have and not feel like you're underinsured.
Yeah, I'm sure that comes up so often about, I originally built with A building material, but I can only replace with B, and that all along you've thought that your policy covered what you thought was going to happen instead of having those conversations with your insurance company. Well, let's kind of move into the post-fire phase. So let's talk about post-fire flooding and mudslides, which, as you know, happens so frequently, and people are like, so if I did survive the fire, I got kicked again with flooding or mudslides. And this was definitely never on my radar. And all the conversations that I had with, fire agencies or forestry professionals, we talked about how to mitigate before the fire. And I did those things and my home survived. But now I'm getting this flooding and this slimy mudslides. What happens if it gets damaged by a flash flood or a mudslide? And how am I covered? And is that part of my fire coverage? And what does it really do for me?
Flooding is a separate coverage. It's specifically excluded under every homeowner, renters, and business insurance policy. So as we know, the second disaster oftentimes is flood risk. So after they've gone through a devastating wildfire, now there's a much heightened risk on that burn scar area because you have the barren landscape for flooding. So after that fire, in your recovery process, you need to be talking to your insurance professional or investigating flood insurance. It is through the National Flood Insurance Program. It's a separate program that is federally backed by FEMA. You can still purchase it in many cases with your own insurance agent or company. The floodsmart.gov website has a ton of great information. We also want people to understand that they could qualify for a less expensive preferred risk policy because they're not necessarily in a high-risk flood area until after that fire. So they may have a less expensive policy available to them. And then when they're purchasing flood insurance, understand what it covers and what it doesn't. For example, you may have a mortgage lender that requires flood insurance, but they only require it for the structure and maybe not enough. When it comes to flood insurance, it's a separate policy for your structure and a separate policy for the contents to replace all your stuff. Many times with a flood, it's the contents that are destroyed, and that is a separate coverage for that. So flood insurance is a more limited coverage than homeowners insurance. It's designed to be that way through the NFIP program because of the exposure involved with that. So really understanding how it covers basements, how it covers your stuff is a critical piece of the pie. And then even a mudslide, is that going to be considered then something that's covered under flood insurance? Many people weigh that risk and decide not to purchase it. However, you have to ask yourself, if I had a flood, could I afford to pay out of pocket to rebuild my home, replace all my personal belongings? The answer for most folks is no. And don't assume in Louisiana recently, yes, they had a presidential declaration. We did in 2013 for the Colorado unprecedented 1,000-year flood we had. But in most cases, a presidential disaster declaration for individual assistance does not come into play. So really be thinking about how you're going to personally protect yourself, both for a fire and then a flood where your risk is heightened after that fire.
Wow, so many things to think about. I hope we answered a lot of questions, but I also, on the flip side of that, hope that we generated a lot of questions in people's minds and that they know that they need to examine their policy and take a look at it. For those that feel like I haven't revisited that in many years, now's the time to go do it. So we did finish about 5 minutes early on those questions, but
and I did just want to reinforce too, Kathy, that we have a lot of information available to folks. So we want to make sure that they're armed with good decision-making information. So from our website, the Insurance Information Institute, they're not selling insurance, it's just a lot of good consumer information. There's all of these guides and brochures available to folks. The free home inventory software, knowyourstuff.org, and then also the Insurance Institute for Business and Home Safety, disastersafety.org. There's great information on mitigation steps and really what insurance companies are looking at when it comes to mitigation. Much of that is based on the IBHS science.
Well, Carol, again, those links and that information are going to be so beneficial. I'm going to start. We got a ton of questions from folks, so I'm going to start asking and sharing some of those. The first one that we have is from Adrian. And Adrian wants to know, what if you own your home outright and you don't have a mortgage? How much does that change your approach to homeowners insurance? And are there considerations to keep in mind when you don't have a mortgage?
When you don't have a mortgage, you're not required to have homeowners insurance. States don't require it by law, so it's different from your auto insurance policy where homeowners insurance is a choice for you. Many people look at their homeowners insurance because they have a mortgage, so it's required by the mortgage. When you own that home outright, which we often see, especially when we're talking about secondary homes and cabins, even when it comes to wildfire risk, where those are the homes oftentimes we see that aren't insured because there wasn't a mortgage in place, so they may have dropped the insurance on those. But really you need to be thinking about, how would I protect myself financially? That mortgage lender isn't involved, but you still want to make sure that you're going to be able to repair and rebuild that home. And so you want to think about, what does my policy cover? What doesn't it cover? The importance of buying homeowners insurance and replacing all of your stuff. So it takes the mortgage lender out of it. But unfortunately, we also see when people don't have a mortgage, that's the time that they're not going to be insured in many cases. So rules don't change when it comes to you wanting to make sure you're financially prepared to withstand any kind of disaster.
The next one, I'm going to try and get a wide variety of questions in here since there's so many. With regard to flood insurance, is there any difference between a mudslide and a debris flow?
You know, that lingo gets really tricky. So with a mud flow, when it has moisture and water as part of that flow, that can be covered under flood insurance. When it's just a landslide, that's something that's also excluded by all private homeowners insurance policies. There is some what we consider a high-risk policy that is available for landslide. Most people don't carry that. So flood insurance really is your best bet. But if you're at extreme risk for landslide, you may want to look at what we consider a surplus lines or high-risk policy for that.
And the next one that I'm going to try and pick out of here is, do you recommend putting insurance policies in the name of a trust?
You know, that's going to be an individual situation. However, it's your homeowner's insurance policy. I think that it's good for it. It's attached to you. And I don't know that there would be a specific reason. I'd have to know more about that question to be able to answer why they would be putting it in a trust. If there was a factor that they thought that that was a better idea rather than just having that homeowner's insurance policy specifically in their name and their property.
So this one, Carol, is there an organization or an association like RMIIA located in California?
California, with all of its risk, has a number of trade associations that are in place there. The Insurance Information Institute, which is our national counterpart, does have someone located specifically there. There's also several trade associations. It's called, and I don't want to throw out the acronym, but ACIC. We can certainly get you that information. There's also one in Northern California, the Personal Insurance Federation of California. So CAL FIRE, I know, works with all of these groups and has great information. So there's good stakeholder groups there as well. So I'm happy to direct anybody specifically to California contacts if they need that.
The next one comes from Todd, and he is in the Lake Tahoe Basin area. And he says the Tahoe Douglas Fire Department in the Tahoe Basin manages the WUI in their fire district. They have data on fuels and can model expected fire behavior. Is there any way to communicate the reality of what the fire hazard is in their district? And they hear time and time again that insurers are looking at Google Earth and seeing trees and then dropping homeowner policies because he's saying those trees are not the issue. So basically 2 parts there. Can they share their data? Is that helpful to share it with insurers? And is it true that insurance agencies are just looking at Google Earth?
Insurance companies want to have as much information on those properties as possible. Insurance companies do have their own information that they're looking at, not just Google Earth. There's more vendors involved, even in those underwriting decisions. Certainly, but I tell people, I've heard this one time I was at a conference and they said, well, I've got this notice to mitigate, but I don't want to talk to my insurance company about it. Communicate to your insurance company. Is there a Firewise program in place? Is there mitigation that's been done in that community? Is there mitigation that you've done on your own property that's going to make you more insurable? So share that information with your insurance company. Certainly they have access to more sophisticated information than they've ever had before as well. But I think what's really important, and we work closely with Firewise, it's something that's very much supported by the insurance industry, but also community mitigation programs that are in place that have rigor to them. Are they ongoing? Are they looking property by property at what kind of thinning of the trees, but then also what is the hardening and structure of your property? What kind of windows, decks do you have? These are all things that will help make you more insurable. If there's something specific to where you live, like these trees, that maybe they're showing up and with your insurer's underwriting, and they shouldn't be, that's something you just need to communicate with your insurance company about. Really, it's a two-way street. They have a lot of information, but the better information you can give them, the bigger picture you can give them, the better.
Okay, let's see. The next one is from Karen, and Karen lives in a Firewise community, and she says the more their community is proactive to mitigate risks, do insurance company review that, and how often, and can they reduce their risk that insurance will recognize for rate reduction? So working with your neighbors, how often is the risk reviewed, and can neighbors working together through a Firewise community get recognized for that rate reduction?
So insurance companies are looking at that individual property risk. However, we all know that if we're taking these steps to reduce our risk and we're doing it, great, but if our neighbor's doing it, even better. If there's a community effort, even better. Your insurance company, though, is looking at that individual property and your individual risk. So absolutely, it helps to be part of a Firewise community, to have a community mitigation program in place. But that insurance company, when they're taking on that risk, still is looking at different things. So they're looking at what is the slope of your property again, what is the construction of your home, are there access roads? So they're looking at additional property information when they're making their underwriting decisions. But I think both participating in a community mitigation program and addressing your own individual risk does make you more insurable. When you look at just reducing rates, really insurance companies are looking at, yes, if you're in the WUI, you live in a high-risk area. That's part of what they have to take into consideration. I think the willingness to insure folks, they're still in the private market because it is a risk that can be reduced, especially through mitigation. That's something that I think is very positive for homeowners living in the WUI. But yes, they're going to have to look at their individual risk and then the community risk. So at this point, insurance companies aren't necessarily offering discounts for mitigation, but some are offering a discount for Firewise mitigation. Just one company at this point, Kathy, which is USAA, because we did get this question. However, other insurance companies have their different mitigation programs in place and things that you can be doing to make yourself more insurable, and that will affect your ability to get affordable insurance and to continue paying less of a price than you would pay if you didn't do that mitigation.
Well, the next one is such a great question because we did not cover this in the questions that I asked you, but this one wants to know, could you provide any information on smoke damage claim process, on what's the process for smoke damage?
So many times when we have a wildfire, and especially when we have thousands of people that are evacuated, so your home's not necessarily a total loss, but there is smoke damage associated with many of those properties. Insurance companies do cover the smoke damage as well. So sometimes when you have a total loss, it can be more straightforward. You're rebuilding a home. When you have smoke damage, again, your insurance company is going to come in, they're going to assess that and really figure out, what is the reasonable cost to then repair that damage. So smoke damage is something that is part of most fire claims processes, and you just really need to be working with your insurance company to work through that claim as well. It may be a situation where there's so much smoke damage your home is uninhabitable. So the extent, it may be a pretty simple situation with smoke damage that can be cleaned and remediated fairly simply, or it may be more extensive than that, but it is something that's covered under a standard policy.
Well, the next one is from Bob, and Bob wants to know, is it the insurance company's responsibility to inform homeowners if they need to make changes to properties before the fire?
So in changes meaning mitigation.
Yeah, exactly.
Right. The insurance companies see this as part of what their risk is. So again, we actually are doing so much research through IBHS and others to look at what are the scientifically proven steps that people can take to reduce their risk. So most insurance companies do have mitigation programs in place where they require mitigation. This has been lauded by our fire officials because it's a pocketbook incentive. Long-term incentive is to make your home safer, to reduce your risk, but the short-term financial pocketbook incentive is often that your insurance company requires that mitigation. Most insurance companies do, and they're asking for specific things, everything from clearing needles off the roof to, improving that ignition zone around your home. So that is something that insurers take very seriously as part of their responsibility and their investment in the rebuilding of your home if it were to be a loss and reducing that risk.
Carol, this one is from Tony, and Tony wants to know, do insurance companies use fire behavior modeling as part of their decision process as it relates to a homeowner's individual policy?
Insurance companies are going to look at different things in making their determination on risk when it comes to wildfire. So there's a variety of things that they're looking at. I can't be too specific. I am not an underwriter. However, they certainly are getting more and more information, even working with vendors to look at both what that risk is in that area, what's that claims experience in that area, and then what is the risk for fire. So they certainly are working with all these different pieces of information. Again, some companies may be looking at different factors, weighing them differently, but certainly their underwriting has become more and more sophisticated when it comes to wildfire and other disasters and being able to weigh and assess their risk and underwrite individual properties.
Well, this one is from Ron, and Ron says, when a property or an entire neighborhood does a large subdivision-wide mitigation project, do you suggest each homeowner let their individual insurance companies know that that work has been done?
That's the best way to communicate it. Honestly, it's a positive that we have so many different insurance companies insuring different properties. So obviously you may have a different insurance company than your neighbor. So important again to give them a full picture of what your property risk is, and then what you've done to improve that risk. I think it's good to communicate that information and really be talking to your insurance company about what their expectations are and what you're doing to address your risk both on an individual and a community level.
Okay, the next one is from Greg, and Greg wants to know, how does an insurance company assess the risk to the owner of land that's not yet built on? And how does that impact a neighbor who's already built his home in the WUI?
So again, you're insuring the property, not the land.
Yep.
So when we get into this neighbor situation very often, I think that's why programs like Firewise and other community mitigation programs are so important, because I often hear from people is, you know what, I did all this mitigation, but my neighbor didn't. And really that risk doesn't change for the insurance company. So if they're not thinning their trees and they're not taking mitigation steps, that can affect you because that still is something that's considered part of your risk. So honestly, your homeowner's insurance is not going to be involved on that land when it's not built on. However, the neighbor that has a home on that property could be affected by that neighbor not taking mitigation steps, not thinning trees, depending where the property line is. So that becomes something where I think it's just so important to have a community working together and understanding that risk.
Well, this one's from Jim, and Jim is from a fire department, and he would like to get the insurance industry where he lives to offer discounts to incentives for becoming a Firewise community and to the property owner. How could he, for his fire department, tackle that with the insurance industry?
As I said, insurance companies are very supportive of Firewise and the work that it does. They're still making individual underwriting decisions. Some companies may continue to look, especially as there's more data around, is the Firewise community having an impact on reducing that risk? Do we have data? Do we have information to back that up? So with your insurance company looking at discounts, again, it is still a high-risk property. And it is something where they're still going to want to accurately rate that risk to be able to pay out those claims when they do have a wildfire or a catastrophic wildfire. So right now the focus really is on insurability. I think the incentive to do that mitigation and to do Firewise really is in making your home more insurable when it's a high-risk property. Whether companies will individually offer discounts, that's something you certainly can be talking to different insurers about. It will be a decision that they need to make from a financial perspective, whether it's, I think, as I said, it's good that we have had this competitive private market still in the WUI. When it comes to discounts, what they're really looking at is, can we justify those discounts? Is it something where it's going to make sense, where we're still going to be able to accurately insure that home, take in enough premium to be able to pay out those claims? But certainly it's something where we are seeing more insurance companies looking at, the mitigation is making insurance more affordable, so that's a positive. And then certainly they may look at the increased data that I know NFPA is working at, be able to say, okay, there's evidence here that this is reducing the risk, so that could justify a discount. But that's really going to be on a company-by-company decision-making basis.
So this one is from Ron in California, and he asks, in Northern California, insurance companies are dropping homeowners insurance regardless of the mitigation they've done to their home landscape. What can we do to keep affordable insurance?
And really the issue of non-renewing in the WUI is one that we hear about. As I said, insurance companies have gotten stricter about insuring all high risk. We are in a situation in our country where we're seeing more expensive, catastrophic mega disasters than we've ever seen in the past. So they really are trying to manage and weigh that risk and stay in the market. So when we're looking at you staying with one insurance company and you may be now a higher risk, especially if you're in a high-risk wildfire area, you're going to have to likely shop more for it. In the past, where you may have just stayed with the same insurer forever or with a preferred insurer, it may take some legwork on your part in really shopping with different companies for insurance. And then if you are in a very high-risk area, again, you may have to consider going with what we consider a higher risk insurance company that may have some higher deductibles and costs. I know what we're experiencing in Colorado, which it's been devastating for a long time in California, is really a situation where insurance companies are staying here. You're able to get insurance, you're going to have to shop more for it, and at the same time, you may have to pay out of pocket more just because of all of the disasters that we've had and this year after year of record-breaking catastrophes. So what we hear from a lot of people is their rates are going up, not that they're not able to get insurance, but they're having to pay more for it. So that is a situation that nobody likes, but is unfortunately the new normal that we're living in when it comes to this catastrophic risk associated with wildfire and other disasters. Again, doing the mitigation, taking those steps to protect your property are going to help you in the long run keep that insurance.
Well, we only have like 2 minutes left. I think this question from Georgia is very similar to the answer that you just provided, but she's asking, what do we do if our property is considered ineligible for insurance, even if they're in a Firewise community and they have a fire station just 1 mile away?
And I would have to know more about that individual property. However, again, I think what we see a lot of times is people just going to their longtime insurer or maybe one or other insurer it is a situation right now that we're in, this new normal, where they may have to shop more for insurance. So make sure that you're even going to your insurance department website and knowing what all different insurance companies are out there. May have to go with the higher risk insurer again. But in most cases, unless you're in no man's land, you're in that classification 10 ISO rating. In most cases, we found that they're able to find insurance. We hear anecdotally that they can't, but when it comes down to it, it is a situation where you're shopping for insurance, unfortunately, having to pay more or do the mitigation. It is a situation where you'll still be able to find insurance, but you may have to shop more for it. If you need some guidance and help along the way, that's where I think the trade associations can help. Also, your state insurance department may help direct you as well.
Carol, we are right at the 1 hour limit, so I want to thank you again for everything that you shared to the participants in today's workshop. I just know that everybody is going away with learning something new, so our thanks to you truly for your willingness to come and spend this time with us today.
And thank you. All of our stakeholder partnerships are so critical. And I speak often to Firewise communities, and it's such a great program. And it's really a vehicle for us to be able to get this information out to folks, both to be financially prepared and to protect their property, because really when it comes to the wildfire issue, they go hand in hand. So thank you, Kathy. We really appreciate the opportunity.
And just a quick plug for the next upcoming workshops on October 11th. It's Community Risk Reduction Success Stories. So we're going to hear from 3 different survivors of wildfires this summer and how mitigation was credited with saving their properties. And then on November 17th, it's our Wildland Urban Legends Part 2. So the one for October 11th, registration will be open for that as soon as we're done today. And thank you to everyone for participating.